Hey guys, welcome back to the Capital Mindset Show. Today we're going to be doing an update video on the portfolio. It's been a while since we've done one. I think it's been a decent amount of time, but the Capital Mindset community is actually growing quite fast. So I want to actually bring everyone up to speed. And also I've been getting some comments in some videos saying, where can I find your portfolio? So this actually kind of serves as like a, here you go, here's the video. And in the description, there's gonna be 2 links, the Discord community, which is free to join. And well, by the way, you have to answer 3 questions. Sometimes some people, very few, some people don't answer all 3 questions. Maybe those are the bots, I have no idea. But anyways, regardless. And the second link will be the actual Google Sheet, which shows actually the entire portfolio. As far as my publicly traded stock holdings. Okay, so that's all that it shows. It doesn't show my cash position or anything like that. It just shows my portfolio, which is all that really matters, and the allocations to them, because we're trying to build a community around capital mindset that is kind of like like-minded investors that like to, you know, share their passion for investing. So I'm going to be talking about some changes that have occurred, and we'll actually get right into the portfolio itself. You might see that some things haven't changed, some things have changed. You know, your eyes might be keen, you'll get to it before I get to it. Hopefully it's quite visible for everyone. I kind of zoomed in because I know some of you watch this on your phone. I will try to be very descriptive regardless, because sometimes I know some of you are just watching or listening to the video, not really watching the video, and that's fine. So I'll do my best. I see that some of you are in the portfolio. Oh, and 3M just went positive, live, haha, live. It happened. Yes. No kidding. All right. So some of the changes I have reflected in my live stream. So when you guys come onto the live streams, you might have some questions and ask me about, okay, hey, what's going on with this firm? What's going on with that firm, etc. So when you look at that, okay, from that perspective, the live streams are a great way for me to communicate with you guys in more frequent time frames what it is that I'm doing. Sometimes a change happens or occurs, and then I'm just like, okay, here you go. Here's the change. So taking a look at the first couple stocks, I'm going to say not much has changed. Now there is a change in the second holding there, or AGRD. So AGRD, I had a contract open on them. They are now closed. I've already actually spoken about that a little bit in the in one of the Discord channels. So again, we'll get to that because I want to show you guys the first video, and this video was published on April 11th, 2022. This is the day, or I think the day after, I might have been the day of, that I actually initiated this contract. So I sold some contracts on that position. I generated some income. And then we'll cut to the chase soon. But basically, if you watch this video, and I have fun with the title sometimes, and it's an 8-minute long video. And sometimes I like to not draw attention to these videos, to be honest. I like to have fun sometimes with the titles and stuff. So it only generated about 300-ish views, so it's fine. But I think these videos actually do provide some value. And then I actually then, again, made another video, and again about 300-ish views. So how options play a role in my investing strategy. For this one, you know, I don't try to get these ones to get viewed a lot because I didn't even put a thumbnail on it. I just like say, ah. And YouTube apparently doesn't promote a video too much if it's not, because I'm always very careful when I talk about options, and I actually state this in this video because I don't think options are necessarily a necessity for an investor to be successful, but I do want to actually share with everyone how I use options. But just because I use options doesn't mean you should. So I had an open options trade where I sold contracts on this position, generated some income, and as of today, I will tell you, because I closed it, I believe, on Friday. Or maybe some of my broker didn't execute all of them, but officially I looked in my account today, it's not in there anymore. All right, so I sold all my, I bought back all my contracts for a much lower price. And in this video, I actually showcase the price appreciation I experienced. It's a little bit nuanced because some people might be confused by that. How do you get price appreciation on a contract when you sold the contract? Well, you can buy it back basically for a smaller price than what you got in premiums. But essentially, that's what occurred. So then I keep the delta of the two, and I can do whatever I want with that. And then there's a reason why I did that. So on the 5th of this month begins a interesting event for that firm. It actually is something that's not heavily reported because it's not a very well covered stock. Basically on the 5th of this, and it doesn't mean that, by the way, let me be very clear. It does not mean that the stock price is going to moon on the 5th. It does not mean that necessarily. Okay. So just because this is occurring doesn't mean anything. There is a firm, The name escapes me off the top of my head, so I apologize for that. But there is a firm that's already involved with the company that they have been and they have announced, right? And I think they announced this on the Friday or Thursday of last week, but that they're going to purchase about $1 billion worth of shares. And the timing of it is not privy to the public, but they could be doing it over the course of a smaller amount of time. And then the issue is I don't know, so I'd want to de-risk that, and I remove that from the portfolio. I basically remove that call options. So those call options were not necessarily a real risk, because if I was called, right, and that they were expiring at the middle of this month, if I was called, then it would have been perhaps more of an opportunity cost than anything. So if the shares were trading at $30 a share, I would actually experience, not $30, sorry, $50 a share. I would experience that opportunity cost between the strike price of 45 and 60. So again, go watch those videos if you're curious about the story behind that. And I'm kind of putting that to rest in this video. So if you see any questions out there and you see another commenter asking, what about that call option you did? If you watch this video, you are privy to respond to that, because now you know. All right, it's gone. All right, let's take a look at the next holding, Dropbox. Dropbox, I've done nothing to it. Absolutely nothing to it. So it's just sitting at where it is. We're up 26.86%. It's fine. So yeah, I've seen when I covered Rob the Popular Investor, which I'll actually kind of segue here and ask everyone, well, what is the YouTube etiquette of these things? Because he made a video regarding one of the videos I made, and so which he suggested that he would like to do some collaborations. I don't know what YouTube etiquette dictates. Should I message him? Do I wait for him to message me? No idea. But we share Dropbox. That's what reminds me of that. And so Dropbox, nothing's been done to it. Meta, so Meta's actually still just nibbling on this one. I was kind of upset that we didn't get to that below 160 price target. So now it's sitting at 7.72% of the portfolio. We are up 22.68%. I have ruined my cost basis. For those of you who've been following the portfolio updates for quite some time, you remember that the average cost was lower than my big gulp price of $160-ish. And well, a bunch of you are just coming onto the portfolio right now. I guess you guys noticed that there's been some changes. Okay, you guys can't see it on the video, but I can see it because it's in the corner. But anyways, and it's good because no one can know who the other person is. It's anonymous. I don't even know who it is. I don't even know who you are. All right, but anyways. Netflix, we almost skipped two. Boston Omaha, pretty much nothing's been done, just been nibbling. We're down 13.66%. It is now at 0.99% of the portfolio. 3M, so 3M is actually, it went, so we are now positive on 3M. It happened during the filming of this video. So nothing's really been done to 3M, sitting at 1.36% of the portfolio. If I'm being honest, I'm less excited about 3M at these prices, but that's why it's reflected in the allocation. Netflix is down 26.58%. This is one that I still want to add to and bring down the cost basis, because it's only sitting at 2.79% of the portfolio after I accumulated more shares after the drop, because that's my strategy. That's typically my strategy. And I usually can say, okay, well, when it was in the 300-ish, it was a okay value. It was not a good value. And then I've identified that in all of the Netflix videos that I've done. And even now it's approaching where I think is going to be a very good value. So the shares I add at these lower levels, these are the ones that I think are going to drive good returns. And then that's going to bring down my cost basis. And I have a lot of room to bring down my cost basis. So yeah. Thor Industries, like I said in the live streams where we discussed Thor Industries, I actually followed what I preached, because I kept saying that, the allocation did not make sense what I did, only human. But so I brought down the allocation a little bit relative to what I believed and what I was stating verbally what it should be. So it's down to where it is. And that was actually that was in the previous update. So it's not in this update. So Rio Tinto, I drew down the position drastically now. It's at 0.33%. And so, yeah, that's basically what's happening with that. Cardinal Health, nothing's happening to Cardinal Health. Cardinal Health performed beautifully, 23.38%, sitting now at 4.24% of the portfolio. AbbVie's drew down a little bit, but, I'm not touching AbbVie really. I'm just kind of just sitting on AbbVie. It's only 5.96% of the portfolio, but we're up 123.36. I might start selling some call options on AbbVie, start generating some extra returning income, but, not really like sold on that idea. Citigroup is the bank holding that I have in the portfolio. A lot of questions I always receive is like, why Citigroup? Again, the answer is always, well, it's not because I particularly love Citigroup. I used to have all the banks. I just held on to Citigroup, and that's the only one that stayed because it was more of like a reason of speculation that, you know, the new CEO could turn things around. But there's a lot of discussion to be had about Citigroup regarding the quality of the bank versus the others. If I had a gun to my head and said I had to pick one bank and one bank only, it'd be Bank of America. Or JP Morgan, but Bank of America over JP Morgan slightly. Citigroup is deservedly so cheaper looking than the other banks. We're only up about 3.96%. It's 1.39% of the portfolio. Molson Coors has finally been performing really well. We're up about 18.58%, sitting at 3.3% of the portfolio. Molson Coors is one I am not currently adding to or anything like that, so position really hasn't changed. Just kind of sitting on it. Next one is Unum. Unum is a insurer, and this is one that I've been trying to say in each video that, and I haven't dedicated a video to it per se, but I've been trying to say or communicate that banks don't necessarily make money from rising rates. And I did that in the bank video, in the insurance video. In the insurance video, I discussed that rising rates are actually really good for insurance companies. So insurance companies are the companies you do want to own, and I identified Unum in a good moment, right? In a very good moment where the book value was almost 0.25 of book. With insurance companies, that is a metric that I actually do use. And so I purchased and I picked up some Unum around $18.37. We're currently looking at $31.13. And I'm not actually, I am reinvesting the dividends here and there, and I'm reinvesting them kind of like sparingly at this point. But I do have it says there, yes, I'm reinvesting the dividends, but that's like a generic label, okay? So with Unum, I like the business. They're continually buying back shares at these prices. Well, I hope they don't buy too many now, but they were buying back when it was lower, and I really enjoyed that the management was doing that. So we're up 69.46%. It is at 5.06%. Allocation currently, when you consider the increase in price. Markel Corporation, we are up 62.28%. Another beautiful company. I'm not really doing anything to that holding per se. I'm not selling. Accumulating maybe like here and there. This very sparingly accumulation. It's now sitting at 3.78% of the portfolio. Okay, so Alphabet. Alphabet is my largest holding now by far. And basically none of the other positions get close to the allocation that Alphabet has. But it's sitting at 21.55% of the portfolio. We are up 183.05%. And yeah, this is another one that I'll be accumulating like sparingly and just not selling. I'm not really, no plans on selling Alphabet unless the story drastically changes. Almost sneezed there. All right. So the next one is Amazon. Amazon is a stock that was once upon a time a larger percent allocation to the portfolio. But when I started showcasing the portfolio, it was already drew down a bit. And when I draw down stocks, I don't know why. I noticed this about myself. I draw them down to close to like 1 to 2% of the portfolio. And so it could easily come back up. And so Amazon now is, it's been in the portfolio for quite some time at this point. So we're still up on the shares that we still hold, about 93.96%, and it is 1.69% of the portfolio. I love that. It's just after today, that's the number it's allocated. Huh. All right, Cirrus Logic is the next one. This is a chips chips designer, and they focus on audio chips, and we are up 106.76%, and it is 0.86% of the portfolio. This one actually has not been drawn down or anything. This one is just no, that's a lie, because it was drawn down when it was in the 90s, and yeah, that was again before this the portfolio was public. But other than that, it hasn't really been. I haven't added to it since then. Gazprom's just stuck there. It's not going to move, and it's at 0.77% of the portfolio. So yeah, we all know what happened to Gazprom. Lukoil was not able to buy that, so that's just there though. I should probably just delete that, but it's just there. And then next is Honeywell. Honeywell, we are up 58.7%, and it's gone, by the way. But we were up. And actually, that's not reflective of the price I sold. I think it was slightly lower when I sold. So, but I keep positions, or I tend to keep positions that I had in the past, just so everyone kind of understands what I used to have. And that was my original cost basis. BHP has been trimmed down, but that's not new information. That's was already updated in the ConocoPhillips BHP video. Or the last portfolio update about 2 weeks ago. That one's been drawn down quite drastically. So now it's only sitting at 0.63% of the portfolio, and we are still up 23.68% on those remaining shares. That was a beautiful performance on that stock. We added it on the tail end of last year. And so, very good performance over a short period of time. Now, the next one was a very good performer. That was after in the 2020 election. And that was the accumulation of those shares. And, this one's been drawn down a lot. Those of you might remember when it was back to close, I think, above or at 10% of the portfolio. Now it's sitting at 2.21%. I'm going to continue to hold those shares. If we get another bump up past the $100, I might trim it down more again, or I just hold it. I haven't really decided on it. Next one is Warner Bros. Discovery. This one will get an update video. I am down currently 18.98%. So I'm actually, look at that. My two worst performers currently are streaming stocks. So the streaming sector is getting absolutely thrashed. I'm just kidding. But yeah, so this one deserves an update video. It's funny because in a live stream I said I was going to trim this before, the thing happened. Turns out that was a good decision, but whatever. Didn't do it. It's too bad. So sad. Yeah, next one is Brookfield Asset Management. That one's gone. This one's looking smart because I sold when it was higher. So for now, just slightly higher, but whatever. And then next one is one that you probably just noticed. Your eyes probably saw that. What the heck? That was gone. Now it's back. Activision Blizzard. So basically, I repurchased the shares, around the same shares that I had in the beginning. And remember, I think there was. The channel was smaller. It was before when we were under 1,000. There was an Activision video, and I actually recommend everyone go check it out. The intro is pretty funny. If you're a fan of memes, you'll enjoy that intro. And I talk about why I was buying, and it was heavily hated. I could tell because some of the comments that were being stated. And I was buying at Activision. I didn't really mind. You see that theme. I buy things. I don't really care what the general public says about a stock. I'll just think about myself and I'll just accumulate. I had no idea, by the way, no knowledge that there was going to be that merger or acquisition. It's just bought it because I wanted the asset, and turned out well. Turned out really well. So I'm keeping it as a measure of the original cost basis. Because I am going to just calculate it that way. So I actually manually made sure that it would remain there because essentially I repurchased the same shares as before. I'm going to keep the delta. So the delta between what I sold it at, which was the day of the merger announcement, I was able to liquidate my shares. And because I actually went through the video. In the video where I discussed selling Activision, I expressed my my thoughts as to why I did that. And so here today, I re-added Activision Blizzard. And so the delta between those two price points, I'm just going to keep to myself and probably accumulate other shares or whatever I do with it. I don't really know. But I wanted to rebuy basically all the shares that I sold around that number. And I did so in a retirement account. So I don't know. I think the merger is going to happen in June of next year. So, that would assume that I can achieve around a long-term capital gains, right? I would get long-term capital gains if I held to that point. But the thing is, I'm going to probably sell at the point of acceptance. So if regulators say, yeah, green light and everything's green light, I believe the gap is going to close drastically. And at that point, I'm going to probably sell. And so I don't want to have any tax liability. That's my strategy with this, okay? So that's pretty simple, straightforward, I hope. So, all right. Regarding the next position, we have Adobe. Adobe, we are down 6.18%. This is, again, designated as accumulating. And so Adobe, I'll tell you right now, I'm not going to accumulate unless the price falls drastically. But I'm happy with its allocation currently. Again, that's a way of measuring kind of like my confidence in the current price is my allocation. My allocation speaks louder than my words. And so the next one is Magna International. Magna International is down 6.35%. Same thing, it's an accumulating. So this one is an industrial that I'm very interested in purchasing over time, more than 3M at these prices, if I'm being honest, and I haven't really done anything to that. NCR was added on. You can watch the video on NCR. At the end of that video, I say I'm probably going to add, and then I said in the Discord that it's probably going to add, and I responded to some comments on the YouTube channel that I was probably going to add. So you probably noticed that that's different. It's only 0.98% of the portfolio. We are currently up 19.17%. It's very similar to the story of Foot Locker. If you guys remembered the video on Foot Locker, Foot Locker collapsed in a single day and then plugged it in to Model. Model was like, heck yeah, buy that. And I was like, you know what, whatever. We'll do the experiment. We'll just buy it. And we also generated close to, I think it was a 20% return on that one, which was good. And I put that in the fun speculative side of the portfolio, which we're about to take a look at now. And let me just tell you, speculative side of the portfolio is a lot redder. It's a lot more red than this side of the portfolio. This side of the portfolio is nice and green. Green dominates the red. And in this side of the portfolio, the green dominates the red by quite drastically, especially when you consider the percentage numbers. All right. So we'll go over here to the speculative side. We'll just slide over here. All right, so I actually created a new designation to kind of help everyone figure out in a better way, like which ones are my actual speculative holdings and which ones are just fun. Okay, so the fun ones, I don't and I will not really provide a thesis because they're fun. That's it. There's no thesis to be had. Now, the actual ones, I will actually provide some thoughts on some of them. Actually, one of them I'm going to completely ignore because it's a microcap. I only talk about it in the live streams if I'm asked about it specifically. Actually, two of them I won't talk about. Yeah, that's unfortunate. Two of them I won't. No. Actually, man, that last one's I can talk about that one. It's an okay size. All right, first one, Overstock. It's in the speculative side of the portfolio because I'm invested in it only for its alternate assets that it has regarding blockchain. Right, easy peasy, lemon squeezy. All right, so. Next one, Zillow Group. Zillow Group, I think, has a tremendous amount of potential to become something akin to the Google of real estate, right? Currently sitting, we're down 9.94%, sitting at 0.92% of the portfolio. I will be adding more to Zillow, just, bringing that up. And then in total, the allocation to speculation is about 8.11%. I have a maximum of 10% of publicly traded money. So of my capital that's in publicly traded stocks, I allow myself a rough, because I'm allowed to break my rules, but a rough limitation of about 10%. And so if I have one speculative holding at 10%, that's about it that I can have. But I limit myself kind of on purpose. All right. So Overstock, again, I'm going to be accumulating a little bit more. I was able to bring down my cost basis. Those of you who pay attention to my cost basis, I was able to draw that down a little bit. So now I'm only down 2.48%, but Zillow I'm down 9.94%. I have yet to kind of bring down my cost basis drastically on that one. Yeah, so the next one, I'm not going to talk about it, but I've mentioned it before. BurgerFi is a fun one. No thesis there, to be honest. Barbecue Holdings, not going to talk about that one really, but also, yeah, it's too small of a company. Greenwich Life Sciences, fun. And Alibaba is... everyone knows. I hope everyone knows why I hold that one. I actually received a comment in the last video. Someone was saying that, this guy, he recommends, and by the way, none of these are recommendations. I've not once said, you guys should, no, that's not being said ever. But anyways, this guy was like, this guy's recommending Chinese stocks, and it's like kind of ironic, right? For those of you who've been following the channel for quite some time, the internet is a fun place. It is a fun place, I'll tell you that. All right, anyways, Tencent, I hope everyone knows why I sold that one. I sold that one as a tax loss harvest, and kind of to keep that YouTube accountability in place, I bought Process instead. And then so I was able to deduct those on my gains, and then still kind of get that exposure to Tencent. And if my thesis plays out correctly about the sentiment-driven investment, then that's going to turn out well. All right. So Greenwich Life Sciences, I already talked about that. Egan. Okay. So Egan Corporation is kind of like it's kind of probably going to be controversial to say that, but it's kind of like a Twilio. It's like a poor man's Twilio, much smaller company. Speculation, guys. Speculation. That's why it's here. It's here because it's a speculation. All right. So pretty much on that note, that pretty much covers all of the stocks, all of the changes that have occurred. I'll update in maybe a couple weeks or a month on the next if any changes have occurred. But on that note, guys, thank you guys so much for watching. I'll see you guys in the next one.